Target shoppers on the South Side say they are in shock and extremely disappointed their home stores are closing.
2 Target stores will shut down for good, leaving a discount store desert in what was a booming area.
Target says we're less than 2 months away from when this South Washington Street store is going to close here in Falls Church, plus one more 15 miles northeast of here in College Park, Maryland. Stores, they're going to close up shop.
Thieves openly stealing merchandise from Target locations across the country.
Year to date, incremental shortage has already reduced our gross margin by more than $400 million versus last year, and we expect it will reduce our gross margin by more than $600 million for the full year.
Doomsday is about to hit one of America's biggest retail chains, Target. As the U.S. faces a retail apocalypse, Target is on the brink of collapse, with declining sales and store closures. With the rise of e-commerce giants like Amazon and the impact of the pandemic, traditional brick-and-mortar stores are struggling to stay afloat. In this video, we'll examine the factors contributing to Target's downfall and the potential implications for the future of retail in America. Target is facing severe challenges unnoticed by the public. A shockwave of factors has hit America's largest retailers, causing a $400 million cash flow deficit, declining sales, plummeting profits, and a sharp drop in share prices. Polluted inventories and supply chain imbalances forced Target to cut prices, worsening its financial problems. Unfortunately, the beloved retailer is the next victim of the retail apocalypse. The retail sector's prospects this year are significantly worse than expected, with even some of America's largest retailers experiencing severe difficulties and significant financial losses. Target is currently facing the toughest challenges following an extremely tumultuous 2022. The company's performance has been impressive initially, but has drastically changed due to disruptions to its supply chains and balance sheets, highlighting the swift and unpredictable nature of the pandemic's impact on the retail industry. Target recently announced its anticipation of negative results for Q1 2023. During its latest press conference, the company acknowledged the significant challenges it faces. Despite offering discounted products, Target is struggling to attract shoppers and clear inventory before introducing new merchandise. We're competing in a constrained environment for a consumer spending, said CFO Michael Fiddelk. Target has projected a single-digit sales decline and a 4% operating income margin rate for its upcoming earnings report, down from the 6% rate sustained over the past 15 years. The retailer's recent financials highlight the ongoing challenge of cautious consumer spending and increased operational costs. With a 43% drop in profits and lower than expected sales during the holiday quarter. In addition, Target's profits have fallen sharply over the past year, with a Q1 decline of 40%, Q2 earnings dropping from nearly 90%, and Q3 profits falling by 52%. These results have led to a loss of approximately $1.2 billion, partly attributed to supply chain difficulties. Target first signaled inventory issues in June 2022, canceling supplier orders and aggressively discounting items to clear out unwanted stock. As a result, its earnings fell from $1.54 billion to $876 million, with a corresponding decline in earnings per share. Adding to the company's challenges is a reported $400 million cash flow shortage. Furthermore, Target is facing the issue of inventory shrinkage or retail theft, which is significantly reducing its gross profit margin and impeding cash flow. According to Retail Dive, the company actually reports 4 times more cases of looting in its stores than other major competitors like Walmart and Kroger. Investors are acutely aware of the challenging environment which the retail giant operates, revealing its vulnerability with no room for error. The outlook for 2023 is bleak. According to the Star Tribune, the small format Target store at 1300 West Lake Street in uptown Minneapolis will close later this month. This store was designed to serve areas where a full-size Target store would not fit, such as urban areas and college campuses, and occupies the first floor below an apartment complex. Last month, a spokesperson for Target revealed plans to implement radical cost-cutting measures with the aim of saving $2 to $3 billion over the next 3 years in an effort to restore financial balance. We must also note that 2 additional stores will be closing their doors in the United States Capitol. The stores at 7501 Baltimore Avenue in College Park, Maryland, and 500 South Washington Street in Falls Church, Virginia, not been able to improve their performance, are set to close. In an interview with CNBC, executives revealed that the company may need to take significant measures, such as widespread layoffs or hiring freezes in the coming months. CFO Michael Fidelk noted a concerning outlook for consumer spending in February, citing a recent report by the Conference Board that showed a plunge in consumer confidence for the second consecutive month, with expectations for the next 6 months at their lowest point since July 2020. Fidelk explained that rising prices are putting pressure on discretionary spending as consumers make room for higher prices on necessities, while rising interest rates are already having a devastating impact on mortgage and car payments. Additionally, Fidelk mentioned that a shift in consumer behavior is a factor to watch in 2023 and beyond. While some behaviors have returned to pre-pandemic norms, others, such as the popularity of hybrid work and increased engagement with digital sales, appear to have permanently changed. Despite these challenges, the company is still grappling with elevated costs in its global supply chain compared to pre-pandemic periods, and coping with a slide in its credit rating as the Federal Reserve's tightening policies send shockwaves through the retail sector. As a result, Target forecasts annual earnings of just 7.75 cents per share, falling below investors' estimates of 9.23 according to Refinitiv data. We're planning cautiously given the economic challenges we anticipate this year, said Target Chief Executive Brian Cornell. Wells Fargo's recent pessimistic analysis led to a stock rating downgrade for Target due to a murky consumer backdrop. Analyst Edward Kelly expressed concerns over weakened foot traffic trends, sluggish margin recovery, uncertainty around Target's ability to scale its business model, sustained comps weakness, and reliance on general merchandise sales amidst the economic downturn. Kelly lowered his rating to equal weight and slashed the price target to $142 from $170. Target's general merchandise sales may suffer a double-digit percentage decline in Q4 2023, as per the analyst warning, marking a more significant downturn than in previous years. This raises concerns about the stock's growth potential. Kelly noted that the company's challenges have been mounting lately, with shoppers reporting shortages of essential items and empty produce aisles, indicating a possible resurgence of supply chain issues. Given its current struggles, the company is being viewed by industry experts as a likely candidate for the retail apocalypse. With numerous underperforming locations and financial difficulties, it has become unsustainable to keep all of its stores open. As per a report by the U.S. Sun, several Target stores in Minnesota, Pennsylvania, Washington, and Ohio will be permanently shuttered by the end of May. The decision to close these stores was extremely difficult, a Target spokesperson told the news outlet. It's an action we take only after multiple years of working to improve performance. Following the announcement, Citi retail analyst Paul Leisure wrote to clients that Target's current situation should raise concerns for its competitors in the home and apparel retail spaces. This is not a negative for Target, but for the retail industry at large, especially those that compete with Target in categories where they are overstocked, such as home and apparel, Leisure explained. Target's recent actions reveal that it is still struggling to adapt to changing market trends. Ultimately, the entire industry is in survival mode, as a looming tidal wave of bankruptcies is expected later this year due to rising prices and supply chain challenges. As Isabella's son, CEO of Short Story, notes, the biggest risk for companies in 2023 is the rapid pace of market trend changes, and Target has been slow to respond. Similarly, Bob Rogers, CEO of IAI, a data science company specializing in supply chain modeling, emphasized that global supply chain issues remain unresolved and continue to plague businesses throughout the year. Most supply chains are configured manually, which means that a human must adjust the parameters every time an interruption occurs. However, this is a tedious task that is inefficient to perform on a large scale, he commented. As always, retailers burdened with heavy debt and financial losses will be the most vulnerable to bankruptcy, added David Berliner, chief of BDO's business restructuring and turnaround practices. Consumers are getting more stingy with their wallets, Berliner said. There are going to be winners and losers, like we always see. We're just not sure yet how soon it's going to happen. Berliner closely monitors consumer debt levels, which are near all-time highs. He fears that the use of buy now, pay later programs is draining credit cards, leaving consumers vulnerable to an abrupt pullback if renowned retail chains go bankrupt. The retail industry employs nearly 10 million people and supports 40 million jobs. Brick-and-mortar stores currently account for 87% of retail sales, but are expected to drop to 72% by the end of 2024. Retail sector is undergoing transformation, and retailers must adapt to the new market conditions to avoid a bleak future. Target's decline is a visible, slow-motion train wreck, and its future is uncertain. We encourage you to share your thoughts and opinions in the comments section below. Have you experienced any changes in your shopping habits due to the pandemic? Do you think traditional brick-and-mortar stores can survive in the age of e-commerce? Love to hear your perspectives on this topic. Don't forget to like and subscribe to our channel for more informative videos, and as always, stay tuned for our upcoming content. Thanks for watching.